What's up, guys? Welcome back to the channel. Today I'm going to answer a question that someone asked me on my previous video. And just so you guys know, if you have any questions, you can always comment down below because I will answer those. And as you can see, I'm now making a video about that one question that someone asked. Nothing wrong with it. Ask your questions because that's how you learn. And let's get started right now. All right, so before I'm diving into the answer, the question was, because I spoke about I use different tiers of risk in my trading, which basically means I don't risk the same on every single trade I take. And I've spoken about it before. The topic is very, very difficult and very enhanced and it goes very, very deep. So in this video, I'm not going over everything because that would be taking so much time. And also that part is for my coaching clients. They get the quote unquote secret sauce. They basically get everything about how you can approach this. But I do want to lay it out to you guys so you can think for yourself, all right, how can I use this in my trading? So let's dive into it. So I have basically colored tiers, 3 tiers of risk, which means I have 3 different groups of trades. And if things fit into one group, I risk one amount of percentage of risk. If it fits into another group, I risk another amount of percentage of risk. And if it fits in the third group, I risk again another amount of risk. So these groups, these tiers are based on statistics and confluence. And I want to be very, very clear here that if you are a beginning trader, if you are not profitable yet, and even if you are profitable, but you're in the beginning stages of being profitable, you don't want to do this. This is really advanced stuff that you want to do later on. And I approach it based on statistics and confluence. And the bottom line is that most people will tell you to risk the same amount on every trade, which is good, especially in the beginning and especially if you're just profitable. But I risk differently because I've been trading my strategy for a long, long time. I know when my strategy performs better. So when I get a setup, I know the likelihood of it winning, but I also know that when certain things align, the likelihood of winning increases. And I don't want to be risking the same on setups where I know the likelihood is way higher than on normal setups of making money. And that's basically what goes behind my approach. Again, it sounds very subjective and it goes so much into it. But you do have to realize this is based on statistics and not just a gut feeling, me sitting there thinking, all right, this setup, yeah, it looks good. I feel good today. I had a good night of sleep. All right, I'm going to risk more. That's not how it works. It's really based on statistics and research and seeing it over again, hundreds and hundreds and hundreds of times, seeing my setup play out, and then finding little things that lined up with my winning trades, testing it again to see if there's really something there. And that's what I base my decisions on. So let's dive into the tier. So tier 1 is the lowest risk, which means I have negative confluence. So I take my setup regardless of the confluence. I just take it as soon as the rules align. However, I also noticed that when certain things align, my win rate goes down. That's what I call negative confluence. So this is the way I trade. I trade a breakout of an accumulation range, and that's just how I approach it in a mechanical way. So it's very, very rule-based. But let's say I get my buy trigger here. So all the rules align, and I have to be long in this area. Negative confluence for me is if beforehand the market made a key swing high and then it gives me my setup, but it does fake out this high before giving me my entry setup. That's what I call negative confluence, because we take out an important swing high and we essentially do the same thing why I entered, which was a false break of the lows and a real break of structure that triggers my entry. But if we then do a false break at a key swing point, I notice that my win rate goes down. And I do take these setups because there's still edge there for me, but I risk less. And that's what's negative confluence for me. Again, they go so much more into this, but you really want to think for yourself, all right, when is my strategy performing less? And can you define it clearly? Can you back it up with statistics? And if that's the case, you might want to play with your risk as well. Like I said in the beginning, be very careful and only do this if you have been trading your strategy for some time and if you are really, really profitable. Tier 2 is simple, normal risk, no confluence, no positive confluence, no negative confluence, just another setup. And again, I've written down for myself what counts as confluence, and it's backed up with statistics. Tier 3, increased risk. This is where all the stars align. This is where I get my setup and it lines up with context. It lines up with the day of the week, goes more into it. But for me, I know when the stars align and I know my win rate goes up from anywhere between 60 to 65%. It goes up to between 70 and 80%. And I don't want to be risking the same on those trades as I'm risking the same on this one. That just doesn't make sense to me. But again, be careful with it. So hopefully that answered your question. I did forget your name, but hopefully this made it clear of what I spoke about in previous video about tiers of risk. Like I said, there's way more to it. The thing I want you to take away from this video is think about your own trading. And step 1 is be profitable, plain and simple. Step 2 is trade your strategy for a while. So you're profitable for a while and you know your strategy. And then step 3 is look how you can implement this for yourself, but have proof for yourself that you're profitable. And then dive into your journal, take notes. And then after some time, you will notice what's your negative confluence. And when all the stars align, what that is for your strategy. And then you can think about how you can allocate your risk in a more effective way. So that's basically today's video. Now, like I said in the beginning, if you have any questions, guys, you can always ask them. This guy asked me a question and now you've watched the video answering the question and now he can work on his trading and become a better trader. Same for you. If you're struggling with something, risk management, psychology, I don't care what the topic is, as long as it's trading related, you can ask your question. And if it's a question I can't answer immediately, I will make a video about it. And then you're the guy that's profiting from this knowledge and now can improve his trading. So think about it for a minute and think about a question you have, comment down below. And then I want to end this video. It's a bit different because I'm running the new series on YouTube where I upload a video a week, but this definitely deserved my attention. So that's why I made a video. Hopefully you enjoyed. If you liked the video, please leave a comment and subscribe to the channel. And then I'll see you in the next video. Thanks, guys.